Hey guys, thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin. If you guys like this video, please subscribe to the channel, turn your notifications on, and like it. So, I've gotten a lot of questions if I can extend some of the past charts that I've done to kind of predict when Bitcoin might ultimately level off. And if you've been following my YouTube channel, I wanted to quickly give you an update on what I've done so that then I can kind of explain where I'm going to take this this narrative in this video. So I made this chart originally, which many of you guys saw, and it's basically just plotting a logarithmic regression line that was only fit to data that is red. So I basically excluded these bubble phases, and people were asking if I could extend this out further to see ultimately when I might expect for Bitcoin to kind of flatten out a little bit. And then I made another graph which showed the ROI. So this showed the ROI from every market cycle bottom, and I showed how it went up at a certain angle in each cycle. So 75 degrees, 50 degrees, 33 degrees, and noting that this ratio between 75 and 50 was 0.67, and then between 50 and 33 was also 0.67. So extrapolating, which is dubious, but if we were to extrapolate, that might mean that the next ratio is also 0.67, which would put us at around 21.78 degrees. And our fourth market cycle has done something like this. Now, obvious disclaimer, we don't know if we're technically in the fourth market cycle yet, because until we get past our all-time high of around $20,000, there's always a chance we might go below 3,100. I don't think that's the case, but it's obviously always a possibility. Now, if we were to continue this, then we might see something like this, where we just, kind of stray away from this line for an extended period of time before ultimately ballooning upwards. You can see in the first market cycle, we stayed relatively close to this line. In the second one, we strayed away from it. We touched it once, but we were pretty far away from it for most of the cycle. And then in the third market cycle, the yellow line, we were really far away from the line. You can see that this yellow curve corresponds to this line, not this one below it. So you can see we're pretty far away. So assuming we continue this pattern, we might expect to see us do something like this. And obviously this is going to be wrong because I don't know exactly what the price is going to do, but just giving you an idea of what it might do. It's possible we just ride the line all the way up. But this is assuming an angle of attack essentially of 21.78 degrees, and then I've also shown this inset in the figure. And if we were to continue our past trends, and that puts us at 332 days into our current cycle. Now this is not entirely correct because this video was made a few weeks ago, so we're probably around a year into our first market cycle, assuming 3,100 was the bottom. And if we continue the same pattern, then we're probably about 3 years, plus or minus 6 months or so, I can't say for sure, from the next top. And you could argue the 4-year market cycle is a thing. It might be something worth considering, but I do feel like there's a significant amount of data that points to the contrary, that shows the market cycles are getting longer, because you can see this is a function of time, and each peak is coming later and later and later. Now that I've showed you these graphs, a lot of people say, well, can you just keep extending them? So one thing I could do is I could just do another 0.67 and then show another angle that gets lower, and then 0.67, 0.67, and keep getting lower and lower. I could also extend this logarithmic regression line out further and kind of see what happens. But I'm actually going to do something completely different to just kind of throw you off guard here, to kind of explain how I'm going to go about more or less predicting when Bitcoin might eventually more or less stabilize, and we might not see these huge changes in price. So what we're going to do is we're first just going to plot the average price of Bitcoin, and this is the average price of Bitcoin each year since 2010. Okay? Now let's add on a standard deviation. So this is the standard deviation of the price in each given calendar year. So if we do that, you can see that there's 3 times where the standard deviation is actually greater than the average value or the mean value. This means that during that calendar year, the price was just fluctuating a ton, or it was skyrocketing, or it was just doing crazy stuff during that year. And because the price was not stable and was anything but stable, you have a very large standard deviation. In fact, the standard deviation is larger than the mean, as I said. So you can see here, I mean, I feel like this is another piece of evidence that it's not a 4-year market cycle. I mean, you can see that just going on calendar years, 2011, we had a huge standard deviation. The price was fluctuating a lot, and then in 2013, and then again in 2017. To me, this just does not look like a 4-year market cycle. Believe me, guys, I would love it if it's a 4-year market cycle. I mean, I would love to cash in my chips essentially in 2021 and call it a day for a couple years and then reinvest. But I just think it's important to not get too committed to either plan. It might be a 4-year, it might be longer. Be willing to pivot if you need to, if the evidence proves otherwise. Now, let's add in the minimum price. So this is the minimum price of each calendar year of Bitcoin. So you can see it tells a slightly different story than the average price, but it's really not that. It's not exorbitant. It's not like very different. It's more or less almost a monotonically increasing function of time. Not quite. You can see that the average price decreases here, and so does the minimum price. And over here, you can also see we've kind of stabilized a little bit. So, really what this tells you is that for most of the history of Bitcoin, if you just bought Bitcoin, if you just waited a year or two, you would be in profit. Now, that's not always the case. I mean, if you're one of the unfortunate ones that you're buying at $20,000, then my condolences. Just learn your lesson, I think part of it is when you first get into this asset class, you kind of have to you kind of have to go through the hazing process in a sense. You don't really understand the market, and you get in because it's on the news, and then you learn your lesson. And you either learn your lesson and become the smart money, or you capitulate and then come back in 5 years later when your grandmother is buying again. So just keep that in mind when you're making your positions in Bitcoin. So we can also plot the maximum value of Bitcoin, which is very different than plotting, say, the minimum. The maximum, it basically, if you were to invest at the maximum time, you can see that you would have to wait much longer before you're in profit. So here you would have had to wait a couple years. Here you would have had to wait, many years, like 3 or 4 years before you were in profit again. And it remains to be seen how long you're going to have to wait this time to get back to 20,000. Here you can see that we had our maximum was in 2011, and then the next maximum by calendar year was not until 2013. So basically it was a 2-year difference. Here, between calendar years, let's just say these are the same. I know they're slightly different, but let's just say it was, so here was 1, 2, and then here was 1, 2, 3. So, I mean, this is a fairly elementary extrapolation, but maybe it means that this is going to be 1, 2, 3. So 3 would be 2020, and then 4, when maybe we're back at 20,000, would be 2021. Then we might continue on our march to 6 figures. Now that we have this in our head, so we have our maximum, we have our minimum, and we have our average. So let's throw out the average for a minute, because we want to look at what are the percent difference between the minimum and the maximum in a given calendar year. That doesn't mean that you could have always invested at the minimum and sold at the max, because it's possible that the max happens, say, in the beginning of the year, and if the minimum occurs at the end of the year, well, then you could have invested at the end of the year to make profits at the beginning of that same year. So, unless you're, say, shorting or something. But let's go ahead and plot out. So we're going to plot here the maximum minus the minimum divided by the minimum. So we're looking at the relative, like the percentage difference here, and then we're multiplying it by 100 just to get in terms of percent. And I've drawn a trend line here just to more or less guide the eye. It's not necessarily meant to be predictive, because you can see, I mean, it's not perfect by any means. But you can note that it is more or less decreasing. So in a given calendar year, the percent difference between the minimum and the maximum is going down. You can see up here we're over 10,000%. We're dropping. In 2017, we were just at maybe 2,500%. So it's clear that this difference is dropping. It's crystal clear. Now it begs the question, which everyone's been asking, well, how long do we have to wait until it is a stable commodity? Like, how long does it have to be until it's a stable asset? Now, I mentioned that, some of you guys were wanting me to extend some of this stuff, extend these logarithmic regression lines, or, continue to draw lower and lower angles until it basically flattens out. What we're going to do is we're just going to take this chart and we're going to extend it all the way out, and we're going to make our time axis go from essentially 2009, but we don't really have data in 2010, all the way out into 2050. Now, you can see that we're more or less in a trend line, a downward trend line. Now, this is a macro level view. Remember that most of you guys are probably used to looking at price on a daily time scale or even a minute time scale. If you're scalping, then you have to look at those very short time scales, and you have to look for any possible advantage that you can get in the market to gain, to make those small percent gains every day. But if you're, say, if you have a 9-to-5 job that has nothing to do with investing, you have a family, you have commitments, you have so many other things, you don't have time to guess what the price of Bitcoin is going to do from day to day. And even if you were to try to guess, you would probably be wrong, because most people end up losing money investing because it's hard not to let your emotions get the better of you, because you're going up against machine learning algorithms and these really advanced bots that are basically they've been programmed to scalp the market really efficiently, and to get those small percentage gains as much as they can. So let's extend this here. So first, we're gonna draw these three lines. So this would be corresponding to percent changes between a minimum and a maximum price in a given year. So this would be 1,000%, 100%, and 10%. Now, if we were to draw vertical lines showing when they cross our trend line, you can see that they would occur here, here, and here for the upper trend, and then here and here for the bottom trend. Now let's draw our upper bound gains. So you can see that in 2021, maybe going into 2022, a potential resistance line between a given minimum and maximum in a calendar year might be 1,000%. That doesn't mean that you can't see larger gains. It doesn't mean that you can't see larger ROIs if you hold for more than 1 year. This is just what this specific trend line shows. If the difference between the minimum and maximum in a given calendar year, 1,000% might be a resistance point in a couple more years. You can see it was 10,000%, then it was 8,000%. Most recently, it was 2,500%. Potentially over here, it might be 700 or 800% in a given calendar year. So this is something we want to keep an eye on. Quite obviously, we want to know when we're getting close to this trend line, because if we're getting close to it, it doesn't mean that we can't go above it. It just means that if we're getting close to it, we probably want to start dollar cost averaging our way out. And it's important to dollar cost average way out because holding your crypto through a bull market is frankly ill-founded, in my opinion. There's people that'll say you just hold it forever and you're in it for the tech, but let's be clear. Everyone is here to most everyone, I think, would be here to make money. You're looking to better your life, your financial situation, and you can still be in it for the tech. There's nothing wrong with that. You can be in it for the tech, but sell at an appropriate time point, a time period, so that you can buy more later. You can be in it for the tech, but also recognize that you're in a bubble. So if you haven't learned your lesson yet, try to learn that lesson as soon as you can. And we've seen sort of these mini bubbles with some different coins during this past year. So if you didn't learn your lesson this past year, take what you learned this past year and apply it to, say, 2021, 2022, or 2023, whenever the next bull market occurs, and be ready for it. Don't get caught sleeping. Just make sure you're ready for what might be coming in the future. So if we were to look and suppose that we were to come back up in say 2022 or 2023, then we might be holding resistance around 1,000% plus or minus, a couple 100% or so. And the interesting thing is that if it's not a 4-year cycle, so you can see that this difference here is much less than this one. So if this next one gets further out and say comes all the way out to over here, okay. And then if we have another bear market that lasts, say, 1 or 2 years, and then the next bull market is, say, 3 or 4 years long with an accumulation period in there, then that might put another bull market ultimately finishing in around the year 2030. And at that point, your upper bound gain, according to this trend line, would be around 100%. That doesn't mean, again, that you can't make more than 100% if you were to have held it for, say, 3 or 4 years. It just means that's the difference between the minimum and the maximum, or the percent difference between the minimum and the maximum in that calendar year. So let's look again. Let's extend it even further. If the cycles are going to continue to get longer and longer, the next one might be occurring around 2040. And it might be corresponding to an upper bound gain in 1 year of around 10%. And plus or minus a few percentage points. And you can see that if we were to extend it out even further to say 1%, that might occur in 2047 to 2048. I mean, that's 30 years from now. There's no way that this data right here is necessarily enough, obviously, to be able to predict macro level moves like this. But so far, it's the best we have to go on. And I think we should use it to at least inform our decisions and not just ignore it. I mean, I think it's just one more tool that you can put in your toolkit to help inform your own investment choices. But remember, this is not financial advice, and you should do your own research. Now, if we plot the lower bound gains in a given calendar year, you can see that in 2016, 2017, let's say 2017, it was around 100%, and you can see we actually came kind of close to it. In right preceding it, and we came down to around 150%, and then we popped back up to the upper trend line. So the next lower bound gain in a given calendar year might be 10%, could be in 2026, and it's not that far-fetched to imagine that would occur. Imagine a bull run occurs in 2022 or 2023, and then we have a bear market in, say, 2024 and 2025. Then it's possible to think that, around that time, 2025 or 2026, we're just in an accumulation phase, and those accumulation phases are going to get more, they're most likely going to get, more flat in terms of the price. It's not going to be as volatile. We've already seen that in the past. We've already seen the price kind of, the volatility reducing on a year-to-year basis. So we might expect that to continue. And you can see again, this is a lower bound gain over here in 1 year of 1%, around getting close to 2034. So this kind of puts a pretty large window on when this might occur. You can see the lower bound occurs in around 2035. The upper bound on 1% might be in, say, 2047 or 2048. But if we essentially just ride this line down for the next 2 or 3 decades, you can imagine that somewhere around 2040, plus or minus 5 years, which I feel like is a reasonable tolerance given how far out that is, 2040 plus or minus 5 years, it's possible that the price of Bitcoin is going to become very stable. If it becomes something that everyone in the world is using, we would expect it to be more of a stable asset and not be seeing these crazy gains. Our kids, our grandkids might be jealous of the fact that we were able to have invested in Bitcoin back in 2019 or earlier, especially if this chart were to continue and Bitcoin were to keep rising and going up. And you guys should remember that, 100% gain in a year of an upper bound, even if it's, say, in 1 year, if Bitcoin is worth $100,000 and it gains 100%, and you own a Bitcoin, you've made $100,000. And if you, say, invested, say, 2 or 3 years before, you could have made much more than that. Just a reminder, this is just in a given calendar year. So, ultimately, I think that is probably where we're headed. Many of you are going to ultimately doubt this. I would love to hear your guys' comments. I'm not married to this idea by any means, but this is just what the data tells me. If you have better data, if you have other ideas, feel free to let me know. I'm all about exploring other evidence. Many of you guys are probably screaming at your screens. He's not considering the halvings in this prediction. And ultimately, I think the halvings are going to have some role in helping stabilize the price, because ultimately our bear markets are going to be bleeding into these halvings, into say the bull markets, and I think that is going to further help stabilize the price, because at the same time that you might see price reduction or correction, you're also going to be entering a period where the coins, the circulating supply, it's not growing as quickly because the rewards to the miners are going to be halved. So if you think about it, I mean, I'm sure that we'll see what happens in the coming decades, but really it's an incredible, just thinking about how Bitcoin was designed and how it's playing out, it's really an incredible idea, and I think we're all fortunate to at least be a part of it as we get to watch what it does during the next couple, 2 or 3 decades. And remember, according to this graph, we're still fairly early on. Now, I know that people who got in say 2011 and 2012, they will, as far as they're concerned, they were the early ones, and anyone coming in now is late. But if you just think about it, like think about your friends and your family. Who around you will talk Bitcoin or cryptocurrency with you? Most people won't. Most people don't care about it yet. I think after every market cycle, there's more and more people that care, but it's going to take time before everyone cares. It's going to take years and years and years, and during that time, technology is going to be built out around it. It's going to become more friendly for people to use. You kind of can equate it to the internet in the early days. I mean, when we first had the internet, it was very difficult to use, and when Bitcoin first came about, it was very difficult to use. People lost a lot of money because of not really knowing, or maybe sending it to the wrong address, all that sort of stuff. These things are going to have to be solved, and I think they are being solved currently if we really want the masses to adopt it. So I would love to know what you guys think about this video. If you would, please subscribe to the channel. We go over all sorts of analysis for Bitcoin. We focus on Bitcoin, I would say probably 40 to 50%, and then we look at a lot of other coins, primarily coins in the top 10, but we also explore some other coins as well that are not in the top 10. And I will be exploring more coins than I already have, in the coming months and years as we continue moving along in our market cycle. So remember to subscribe to the channel. Check out the description below if you're interested in joining my Telegram group, where I'm pretty active. If you want to ask questions, feel free to do that. Follow me on Twitter. And that is it until next time, guys. Bye.